Hi there. You may have heard that on the Friday before Memorial Day weekend, the SBA put out new and updated guidance on the PPP loans, both the timing of when you have to spend the money and some of the procedures around forgiveness. So if you missed it, you are not alone. I am lawyer Autumn Witt Boyd. Today, I'm recording this on Wednesday, May 27th. So if you're watching it a bit later, and things may have changed, things are shifting rapidly here. But I wanted to go over a couple of the new things that we know about now, and some of them are different than what we heard about just a week or two ago. So I'm going to run through the two documents. They are long, so I am not going to cover everything. If you are interested, we will put these up on our website. You can go to the link below, awbfirm.com/COVID-19. We will have those up either today or tomorrow. You can click through and read more about it there. So the first difference, the first change that I saw in reading through these documents is this 8-week period that we have to use the PPP loan money. It starts the day the money hits your account. It ends 8 weeks later, and you're supposed to use it all up during that period. But of course, many of us have payroll that doesn't exactly line up with that 8-week period. If you get your loan on June 26th, but you run payroll at the beginning of the month, or if you do every 2 weeks, you can see how it might not line up. So what we learned today is that there's a couple different ways. They are basically giving us some flexibility on how you can use the money during that 8-week period, or an alternate 8-week period, or kind of a whole other period. So here's what we know today is that, and this is different, payroll costs are considered paid on the day either you distributed the paycheck, so if you actually hand out or mail paychecks, it's that day, or the day the borrower originates an ACH credit transaction. Now, what we had seen before is it was the date that the employee actually receives the money in their account, which if you use a payroll processor, there's usually a couple days lag time between the day the employer, hits submit on payroll, originates the ACH credit transaction, and the day the employee actually receives their paycheck. So that's an important thing to note. But here's the good news is that payroll costs that are incurred during the last pay period of your 8 weeks, or your alternative payroll cover period, which we'll talk about in a minute, they're still going to include those as long as you pay it on or before the next regular payroll date. So basically, you can pay your payroll after the 8-week period, and you can include payroll that was incurred during the 8-week period. So how does that actually work? Payroll costs are considered incurred on the day the employee's pay is earned. So that's generally going to be the day the employee actually worked. So you can figure out when did your employees work during that 8-week period, and you can include all of that money. Even if you're actually running payroll after that 8-week period, that's going to be okay. There is a note in this guidance that if you have employees that basically you have furloughed, so they're not really working, they're still employed, and you're still paying them, that those payroll costs are incurred based on whatever schedule you establish. So again, we've got a lot of flexibility here. So this is good news. Now, there is this alternative payroll period. This is only for employers that have a bi-weekly or more frequent. So that means you're paying every other week or every week or some other period that's more frequent than every other week. If you're like me, I pay my employees once a month. We're not included in this alternative period, which makes no sense to me because I think we are the least likely to totally match up that 8-week period, but that is what it is. I'll include some comments at the end of the video about some changes that are afoot in Congress, but they haven't passed yet, so it's all a little bit of conjecture. But this may change. But so this alternative payroll period, basically you can choose another 8-week period. You can make it start on the first day of your payroll cycle so that you can match up your alternative payroll period to your 8 weeks, and you're not going to have to do any kind of gymnastics around when you're running payroll and figuring things out. Okay, so that is what we know now about the timing for paying payroll. The other question that has come up a lot is because we have this 75-25 rule in the regulations that you have to spend 75% of your PPP loan amount on payroll. You can only spend 25% or less on other expenses, which is going to include rent, mortgage interest, and utilities. So to make that 75%, maybe you're paying people hourly, but they're working a little less than they were last year, or since you get 2.5 times that 8-week number, Some people are having trouble, getting their payroll number up enough to meet that 75% threshold. So there's been questions about, can you do bonuses? Can you give people a little extra pay, hazard pay, to get up to that 75% threshold? We thought the answer would be yes, but now we know for sure in these regulations, yes, you can absolutely do that. The only caveat is no single person can receive more than basically a prorated 8 weeks of a maximum of $100,000 annual salary. So what that ends up being is about it's a little over $15,000. If you do the math, 100,000 divided by 52, and then multiply that times 2, that's going to be your 8-week number. So you can absolutely do bonuses or give your employees hazard pay as long as they're not exceeding that around $15,000 cap. The other thing that we learned new, and this is important because I've seen a lot of self-employed or business owners kind of struggling with, well, how much do I pay myself out of the PPP number? And a lot of them were just using that, well, I'll use that, I'll pay myself the maximum, that, about $15,000. You cannot do that. You are going to be capped by the lesser of, so this is the lower of, either 8 weeks worth of your 2019 compensation, and that's going to be calculated by your Schedule C or your K1 if you're in a partnership. That's going to be it's your profit number. So if your business only showed $50,000 in profits last year, you're basically going to multiply that by 8/52. So that's 15.38%. And that's going to be the maximum that you can pay yourself. You cannot pay yourself all the way up to that $15,000 threshold. That is only for employees. You don't get to get up to that maximum if you are the owner. You're going to be tied to what your actual profits were in 2019. So be aware of that change. Oh, here's the actual number. 15,385 is that cap. All right, so the next question that we are getting is with the other non-payroll costs. So this is your mortgage interest, your rent, and your utilities. How do we figure that out? Because again, you maybe get an electric bill on a monthly basis, but maybe it's from the 14th of one month to the 13th of the next month. That's your cycle. And so that may not line up with your 8-week time period. So you can still count those. You can still get those forgived as long as you either pay it during that 8-week period, or if it was incurred during your 8-week period and you pay it basically on your next billing date, even if your bill date is after the covered period. But there's going to be some finagling, and you're going to have to do some prorating, it looks like. So what this guidance tells us is, I'm going to read the example because it's pretty helpful. So if the borrower's 8-week period starts on June 1, ends on July 26th, the borrower can pay its May and June electricity bill. So you may have gotten your electricity bill for May, but it's due in June. You can pay that during the 8-week period, and you can pay your July electricity bill on August 10th. So that's outside the 8-week period, but some of the days that are covered are within your 8-week period. So you can seek loan forgiveness for both the May and June electricity bills because they were actually paid during the 8-week period. And you can seek forgiveness for the portion of that July electricity bill that's within the 8-week period. So you're going to have to kind of prorate it. Since that bill maybe was for the calendar month of July 1 to July, 30, 31. I don't have a calendar in front of me. You can only prorate it for the days that were actually in that 8-week period. But so that way you're actually kind of getting 3 months bills covered because you got the May, which was really before the period, but you paid it during the period, and June, and part of July. So that's a little different. There was a question about, can you make advance payment? So the other thing I will note here is that you can prepay some of those bills. So if the bill is not due until a date that's outside the covered period, but you've received it, so you know what it is, you can go ahead and prepay it as long as it's within the covered period. You cannot do that with mortgage interest. So no prepayments are going to be allowed and be forgiven within that 8-week period. You have to just pay it as it's due. Okay. There's some new interesting things about full-time equivalent employees. So if you're worried that you don't have the same number of full-time equivalents as you did before, there's some new information about that. I'm not going to get too much in the weeds of that because most of the online businesses that we work with here at the AWB firm are pretty static on their headcount. But if you do have part-time workers and you're not sure about getting that full-time equivalent math right, there is some new information in here. So check that out. I think that is, the last thing I wanted to mention is, this is new. If you have fired an employee for cause, or if they quit, or voluntarily request a schedule reduction, is that going to affect your forgiveness? So the rules for forgiveness are, you're supposed to keep your head count the same as it was before the pandemic, or kind of on the start date of the pandemic. So they want you to keep that the same. They want you to bring people back if you let them go. So will your loan forgiveness amount be reduced if an employee is fired for cause, voluntarily resigned, or voluntarily requests a schedule reduction? And the answer is no. And that is new. So if through, you didn't lay people off because of the pandemic, it was you fired them because they stole from you or they were doing a terrible job, and you've got that documented, because this is something that the bank may ask for documentation of this when you're going through forgiveness. You want to make sure you have all your ducks in a row. But if you are firing an employee for cause, if the employee quits or requests a schedule reduction, that is not going to be held against you in figuring out if you've met those headcount requirements. So that's an important new thing to know about. All right, switching over to the other document. I don't know why they didn't just put these together in one document, but this is some new information basically about forgiveness for banks and for borrowers. There was some understanding that if you were underneath a $2 million loan amount, that the SBA would not review your loan. This new guidance says they can review anybody's loan they want to make sure that you were really eligible. So I think it's obviously less likely if you're underneath that amount, but they're kind of reserving the right to review anything they want. This new guidance has more information for the banks about how they can go through the loan forgiveness process. It's got some deadlines for them, so that is good to know. They're going to be kind of on a strict timeline to process your forgiveness documents when you're ready to do that. And then let me keep scrolling down. I think that was the big thing here, was about the review. Most of this about the forgiveness was less relevant to borrowers, but I just wanted to note that they are going to be on some timelines, so that's good news. There will also be a review process, so if you get denied for forgiveness, there will be an ability to appeal that they're still coming out with what that will actually look like. But I hope this was helpful. We are trying to stay current on all of these new rules and regulations that are coming out all the time. There will be potentially some more changes coming because Congress is trying to fix this 8-week period. I think they're getting a lot of feedback that the 8-week period is just too short. It's too cumbersome trying to spend all the money in this 8 weeks. So both the Senate and the House in the federal United States Congress are working on some alternatives. My husband told me last night he thought that meant that we were going to get more money if we had applied for a PPP loan. That is not the case. They're just going to give you a longer time period to spend it and basically kind of relax some of these really tight timelines that businesses are under. So it looks like that is going to happen, but the House bill is a little different from the Senate bill. So we're keeping an eye on that. We'll see what that actually shakes out, what it actually looks like, but I think that should come out within the next week or so. And there also may change that 75-25 rule. That's the other thing that is being discussed. The requirement that you spend 75% of your loan amount on payroll. So we will see. Stay tuned. If you need help figuring out the PPP loan process, if you have questions about forgiveness or making sure you're following the rules, we are available for consultations. You can go to the link below, awbfirm.com/COVID-19, and find out how to contact us and lots more resources. So stay tuned because there will be more to come.